Good morning. Welcome to a fresh edition of Commodity Chat from Lotus Advisory Services. I am Shiv Kumar and we are bringing this photo shoot at 8 a.m. on Friday, January 3rd, 2014. Hope this year brings you a lot of joy, health, wealth and happiness, and the markets are expected to bring in more joy as the months progress, and we hope that this year would be more profitable than the previous quarter, especially September, October, November, December of 2013. The last quarter of 2013, the markets was extremely sluggish, especially in commodities, with no major lateral movement or no breakouts, and the volumes were extremely dull, and hence trading was that much more difficult and less profitable, and opportunities were much less. Hope so that from this year, the markets turn out to be more profitable, and hope we also buck the trend and given to more profitable trades and more analysis and reviews. And we request all of you to visit our website at www.akshayashiv.com and our photo shoot presentations. As promised, from this weekend, we will be coming up with more photo shoots, especially on Nifty and NCDX also as separate segments in presentations. Now we come to the macro data today and the trends that are likely to emerge today in all the sectors, in the Nifty, in the MCX and the NCDX. First, let's get into the Nifty mode. Nifty hit a fresh high of 63.58 yesterday. It was trading at highs till around the 1:30 to 2 o'clock mark, and post 2 o'clock we saw a sudden sharp decline by about 120 to 125 points to close at around the 62.25 mark. No major reason was assigned to the sharp decline, but this technical sell-off triggered all sell shorts in the market, all stop losses in the market, and closed at the day's low of 62.28. This morning, expected to open weaker, could trade the Nifty spot at around the 61.90 to 61.95 and the spot closer to the 61.50 to 61.60. Strong support is now seen at the 61.50 to 61.60 mark. Of course, initial trend line suggests a support at 61.80 as an intermediate support. Now, a break and a weekly close below 61.50 would take it up to 60.50 to 60.80, where fresh buying could emerge. On the other hand, if 6050 is also not sustained in the days to come, a breakdown to 6000 to 5950 could trigger a fresh entry point for fresh buys in the market. On the flip side, resistance is at 6300 to 6350, which does not seem likely in the days to come. The downward pressure is more pronounced, and hence sell-on rises could be the strategy, especially in Nifty. But if the market opens gap down, we would suggest a strategy of wait and watch until marginal pullbacks are announced. The Prime Minister Manmohan Singh is having a final press conference at 11 a.m. this morning. No major swaps or announcements are expected to be made, but it's better to wait till the press conference is over to get a clearer trend on the market. The HSBC Indian Manufacturing Index came out a tad lower than expected, although holding above 50. Markets were expecting it to be on the positive side, and this triggered a downslide. Inflation continues to be a real cause of worry for the markets, and the steps that are likely to be taken by RBI in the days and months to come would decide the trend of the interest rates and the INR to a great extent. International market news came out last night on the unemployment and the manufacturing data. And post these data, the US Dow Jones slipped sharply by around 1% on downgrades of the Apple share. And this has triggered a collapse in the Asian indices this morning, which are all down in the red. INR lost about 36 paise towards the close yesterday to close at around the 62.26 mark. Now we see that the resistance is at 62 and 61.5, and resistance at 62 and support at 62.5 to 62.8. So the broad range is expected to be at around the 61.50 to 63. Now any weakness in the Nifty this morning and any further weakness in the days to come could only weaken the rupee closer to the 63 rupees to a dollar mark. Major power policy reforms are expected to be announced in the day today, as was pronounced by the Finance Minister last evening in his press conference. This will act as a major shock to the infrastructure and the power shares. Now, I'll come as a separate segment in the coming couple of days on the Nifty and the specific stocks that we need to identify for investment and for short-term trading. Some of the stocks that immediately come to mind are Arvind Mills, Aurobindo Pharma, Biocon, Tata XLC, and Tata Communication. These are some of the stocks that you could watch out. This separate segment will be shot by me maybe on Sunday or Monday, which I request you to follow for Nifty traders. Now we come to the individual commodities for MCX and in the international markets. International gold is now trading at $1,231. We have seen a sharp upside after the lows of breakdown below 1200 over the last 15 days to come to around the 1230. Now, about 1220, it remains positive till the $1240 to $1250 mark with current support at 1200. So, at the current rally, we could expect swings to take it up to the 1240 to 1250 mark with support below 1200. Now, a break below 1200 could see downside to 1190, but immediately as of this week, that does not seem to be visible as the market seems to be consolidating and fresh buying seems to emerge from every support that we have mentioned over the past month. Then from the long range point of view, we need to see if 1250 and 1265 gets taken out decisively for a move up to the 1290 mark. But that's a long way away, and as of now for intraday traders, we could see some positive momentum. On the MCX, so long as it sustains about 29,000, could test the 29,200 to 29,400 mark with support below 28,800. Closed at around the pivot of 29,000. Watch out for INR today. Any weakness in INR could push it up closer to the resistances to be tested. Silver is now trading a tad above $20 at around the 20.05 mark. Resistances are at 20.3 and 20.5 and support at 19.7. It has taken strong support over the last month from the lows of $18.5 to the current mark of 20. A break about 20.5 could take it up to 21 to 21.5. All these levels could be taken on a closing basis, especially being a weekend. It is better to wait for fresh entries for positional traders to see how the weekly close pans out to be. A close about $20.50 could take it up to 21 and 21.5, which is the Fibonacci retracement level of 50%. On the MCX, a close above 45,000 was positive. It hit highs of around the 45,500 mark before the data came out of the unemployment. Closed at around the 45,400 mark. Current support is now seen at 44,800 and looks to test the 45,700 and 46,000 levels. Buy on dips would be the strategy in silver also. Watch out for INR. Now we come to the energy space. Energy crude oil saw a sharp decline, both in dollar terms on the MCX. In dollar terms, it's now trading at around the $95.56 mark. And on the MCX, it broke the strong support of 6,000 and came down to the lows of 5960 and 5930, which are the 61.8% Fibonacci retracement levels from the high of 6250 and 6270. On a positional level over the last 30 to 45 days, thrice it has hit the resistances of 6250 and 6270, but unable to close above those levels. Broke the 50-day Fibonacci retracement level of 6050 and closed at around the 6,000 mark. Now the levels to watch out for on a weekly close basis on the downside would be 5950, which is the 61.8% retracement level. Now a break and close below 59.50 could take it up to 57.50 on a positional basis. On the upside, the immediate resistance could be seen at 60.30 to 60.50 on a positional basis. Inventories are expected this evening, and we expect inventory to be in the region of minus 240 BCF compared to the previous week's inventory of minus 470 BCF. Natural gas is consolidating at the 265 to 270 levels, closed at around the 270 levels yesterday. Now, sustains above the 270 to 271 mark, could take it up to 275 to 278 with support at 265 to 264 levels. Weekly inventories are expected today, and inventory is forecast at minus 125 BCF as against the previous week's close of minus 175 BCF. Now, on a positional basis, you need to watch out for levels of 278. A close about 278 could take it up to 292. On the downside, strong support is now at 264 and on a multi-month positional basis at 260. Now, one can enter buys or dips at around the 268 levels. with stop loss below 264 for target of 275, 280, 285, 290 and even a testing of 295 in the days and weeks ahead cannot be ruled out. Buy on dips would be the strategy for natural gas, and for crude oil inventory, wait for inventories and a weekly close below 59.50 or above 60.50 as the case may be, as elucidated by me in my commentary. Among the base metals, copper is consolidating in the over the past few weeks in the 465 to 470 mark. Now closed at around the 469.80 mark. 472 to 474 levels are the levels to watch. A weekly close above the 472 to 474 could take it higher up to 480, 485 levels, and with some immediate support is now seen at the 468, and below that the weekly positional stop losses for buys would be around the 465 marks. Expected to open a tad lower by 0.30% at around the 467 to 468, but watch out for INR levels. Any weakening in the INR could only hold prices above the 470 mark, but on a positional basis, targets of up to 485, 490 cannot be ruled out. Among the other base metals, aluminium and lead are most positive. Aluminium, especially for the past couple of trading sessions, is holding above the 110 mark, and a target of 112.50 cannot be ruled out. The target could be 112.50 with stop losses below 109.8 for buys around the 111 mark. Buy on dips is the strategy. Lead seems positive with stop losses below 137 to 136.80. If sustains above 140, targets of 142 and 144 cannot be ruled out. LME copper and aluminium are holding at multi-month highs. LME copper is holding above the 7,400 mark. Resistance is at $7,500. A close above $7,500 could take it to higher levels. Zinc is positive so long as it sustains above 130 with stop loss below 128 for targets of 132 to 134. Overall, today being Friday, it's better to wait for data to come out and the INR open for fresh trades to be initiated. Do not carry over positions unless it closes above the pivots as mentioned by me. All our intraday trades would be posted on our website at www.akshayashort.com. Visit our Facebook at facebook.com/Lotus Advisory Services. Visit our photo shoots periodically, especially the ensuing photo shoots on Nifty, which I am likely to give on Sunday, and I'll be focusing more on individual stocks as also the Nifty and the Bank Nifty. Thank you. Have a safe and profitable trading day.